On the radar at Breakingviews this morning, BT's value-added pension fix and Vivendi's plans to buy EMI are sounding pretty sweet, says the team. With me is Chris Hughes. Morning to you, Chris. Let's start with BT. Lump sum payment, £2 billion before the end of the month. Where are they getting this cash from?
Well, it's from existing resources. They can afford it. I mean, what's amazing about this deal, and it is a deal, it's a deal between the company and the trustees who supervise the pension fund, is that it's gone very much in the company's favour, it seems to us. I mean, this pension deficit has been a real drag on BT for absolutely ages. Last valuation was about £9 billion. The company's market cap's about 18 billion. And the question is, how on earth they're going to fix it? Now, pension deficit is very complicated. They're all about various assumptions about inflation and the real value of the liabilities and asset growth. But basically what they've managed to agree here is that they're going to do a top-up, and then they're also going to reduce the payments they make over a period of time. Now, the interesting thing about this is that if you're the trustees and you see that actually the company's doing quite well, it's generating good cash, it's in a position to do a top-up, you could conceivably have gone further in demanding a lot quicker payoff of the remaining deficit.
And why did they not do that?
It's not clear. I mean, look, the standard argument is that the trustees recognise that they don't want, that it's not in their interest actually to weaken the sponsoring company. So you don't want to put too much pressure on that sponsor by making them, increase payments, to bring the deficit down faster. Now, what's been agreed here is that the deficit will come down over the period up to 2021, but it involves actually a reduced annual top-up by BT. Now, you could say that it would be a tall order for the trustees to extract higher annual top-ups, but to actually sanction a reduction and allow the payoff schedule to remain pretty elongated seems quite generous. I mean, they could have said, look, you're doing okay, let's just clear this deficit a lot faster, let's maintain the payments at the current level and let's pay it off
Market
faster.
likes it. Market, I think, about 5% today.
And look, the market reaction we think is entirely right.
I mean, this has been the albatross to a large degree, though.
But the market is saying, hey, look, basically BT has got a better deal here. It's on the better side of the deal than the pension fund trustees. And at first look at this, I mean, that looks like entirely the right reaction.
Vivendi EMI. And Jeff Goldfarb makes this point. The regulatory environment has changed so much. I mean, look at AT&T, T-Mobile USA. Look at the NYSE, Euronext, and Deutsche Börse. What happened there? What do you think European regulators are going to say? And do you think? And how do you think Vivendi is going to play that?
Well, Vivendi's already actually played it by agreeing to take on the regulatory risk of this deal, i.e., whatever happens, it's on the hook. Now, that's pretty rare, but another way of looking at that is that there's a sort of implicit break fee in this, because if it was forced to kind of do a deal that was blocked, we would then have to sell on the assets. Now, that means there's a risk it sells them on for less than it's buying them, which effectively you can think of in sort of corporate finance terms as a sort of implied break fee. Now the question is that really affordable? Now look, firstly you've got to say, well look, as you say, the regulatory environment has changed, so the prospect of it having to sort of pay this indirect break fee through forced disposals has gone up. You mentioned AT&T, obviously.
Well, that was $4 billion or something, wasn't it?
Well, that was a sort of separate, that was a sort of agreed contractual fee. But clearly, one has to be cognizant that the regulators seem more minded to sort of bear down this kind of thing. So Universal looks like it's more likely to get into this situation. But then the question is, can it really, if it's forced to sell assets, can it really do them at a price which is higher than it's agreed to pay? And it's not clear it really can.
Very good, Chris. Many thanks for that, Chris Hughes. If you want to watch our US Breakingviews show, comes on every day, 12:30 Eastern, 16:30 GMT. I'm Axel Threlfall. This is Reuters.